Hi, everyone. Let's have a great day. Turnaround Tuesday. So far on Turnaround Tuesday, a guest turned around and canceled. Greg is going to be with us live today. So the Wizard of Waves will be here. How's everyone doing today? Everyone doing all right? Okay, so let's go over what I talked about yesterday. Hi, Ben. Nice to meet you. Welcome to Face, my trading warrior brother. So yesterday I talked about the yen crosses, and I want to tip my hat to Blake. He got short Sunday night on Euro Yen. This is a daily. So I still think that they're.
I'm still.
I'm a little bit surprised. I know how you. Oh, it's because you were so small. Because normally on a move like this, Blake, I kind of know you guys, and your styles. Normally, I would say 90% of the time you would have taken at least something wrong.
No, I got a little bit more aggressive at the close. I got a little more aggressive at the close because we had such a weak stock market close.
Yeah. This could, anyway, I was going to say it still could be a failing rally up here. I mean, I know it's really extended. But the only thing is, the way Euro Pound is acting, it would almost make the Guppy the preferred short. Because, I was looking at the Guppy, and really, we have that breakout where we've all talked about it. Steve's pointed it out and everything on the daily, and we came back and we tested it on the Guppy.
Yeah.
But, really the pound looks a little worse. So, and then we came back and actually, negated it. But, everyone's saying this was a breakout test right here if I extend the line out, Blake. But this bounce compared to the Euro bounce is pretty anemic in my view. I think that next time down, if they give people another chance to buy this breakout, it may hold for a little while, but I'm looking for this breakout to be negated. And I still think there's a chance that, perhaps, we still don't take out this high in Euro Yen on the daily. And, you can't rule it out that right here, right now, is a pretty good shorting opportunity. I wouldn't put my stop here where, about at least one guy has a stop over this high. I give it some tolerance, but it, could end up being a great short here too. But
yeah, I have to keep in mind the big monthly 618 is at 134.30, so we might see that actually.
That could be marginal new high. But I mean, to me, it doesn't look like a position long. It looks like it's distributing. Sometimes it takes a few attempts of distribution for the banks to get short.
Well, the problem is we also have a really the mod market's really testing some pretty key levels here. So
so that's the
support, and we got Nikkei at highs again for like the 16th day in a row. It's crazy.
Yeah. So
but anyway, I'm going to let you continue to go.
All right. Yeah, I just have a few more things. I have a few. I'm always rooting for you, buddy. So I just have a couple of more things I want to cover. Like yesterday, talked about a bounce in the gold here, and it was a good day trade if anyone took it from. But now it's looking to me like we're going to have one more low. I started looking at this last night, and this could be some kind of wedge setting up here, because I still think we're going to have more than one down day in the S&Ps before we have the spectacular year-end rally that everyone's looking for, which also makes me a little bit skeptical that everyone's looking for a strong year-end finish. But back down here in gold could be the third drive. So to me, that could be shaping up. I just haven't seen this much bearishness in gold in a long time. You're not seeing a lot of gold bulls come out of the closet. And I could see how Greg could be right for a move to 1220 long term, but I'm thinking that we get one good rally in gold, one good shakeout in the S&Ps before gold resumes its downtrend, and the S&Ps blow off one more time. And kind of jives with what some research that Blake sent me and what Greg has been saying. And so that's my view on that. But really, when I look at the end crosses, I know there's technical reasons to be long the guppy, but to me it looks like the weak sister. And I did want to talk on a little bit about the Aussie yen, because I think yesterday we were here at the beginning of face, and I was looking for a confluence of some moving averages on the 4 hour, came down. It was in here, close enough for government work. So we'll see if we get a failing rally here. But this was a nice pullback. So maybe turnaround Tuesday is strength in the end crosses, of recovery in the S&Ps, because the S&Ps didn't quite get to that 85 number that Blake talked about. And I think Greg has that number. We didn't quite get there yesterday before the sell-off, but we stalled at 80 or a little under 80. So maybe we get one more push. But I lean more towards yen cross shorts. So that's where I'm at. Let's see, you're on an Aussie Chimaclaw. Do I know you from somewhere? Previous room? Your first name sounds familiar to me. And USD CAD is sell, and your margin's at 0. Okay, so you don't even use any leverage. I'd have to change my song from use less leverage to use no leverage. Use no leverage when you trade the markets. Use 10% stops so you don't get picked off. You can use a 10% stop and it won't hurt you. Oh, Kareem likes to max leverage. So those are some of my thoughts. I still think that the euro here, it's range bound, but part of me smells one more push up in the euro, and I just don't want to be long the dollar right here for some reason. I don't know if it's on iTunes. So I still think euro, before we headed lower, my guess is that they take out the buy stops here over 1850 and take out the buy stops here. So maybe even they go for these, but I don't think that these buy stops are going to stand. And we all know there's a bunch right here. So, sometimes you could look at a market and say, okay, if I'm short, where's my buy stop? And your answer is going to be, oh, over this high or over this high. Well, that's where everyone's is. And if you have a technical reason, just like floor traders did, to be long into the stops, it's a pretty good trading technique. And then once they take out the stops, you use that liquidity to liquidate your longs, maybe even consider reversals. So, that's what stop hunts are. So that's my bet on euro too, that I don't think I'd be short euro here. In fact, I think you could probe it and be wrong just to have a fail-safe stop right here at 1690. That's really not a big risk, especially if we get through 1850 and clean out some of the bears before we head down again. Oh, and it's all going to come down to Draghi on Thursday. That's right. Steve was talking about it. Thank you, Brett. Hey, and Brett, thanks for all the great charts that you send in my Twitter feed. Really appreciate it. And, different people that you follow that edify people here in face and on Twitter. I appreciate your support. So any questions for me before I hand it off to Blake? And hang around, Greg is going to be here after Steve is through. Anything you guys want my view on? A prehistoric view on any instrument? Going once? Going twice? Okay. I must have answered everyone's questions. Okay. So Blake, okay, we know you're still short euro yen. I know you have other things. Again, you're not a one position guy. You're kind of a portfolio trader, is the way I would describe you. You always have different stuff on, and also I've noticed you balance your book with things that aren't always correlated the same way. And but yesterday's entry in euro yen, as I told you on Skype yesterday, that was a pro move.
Well, thank you.
Unfortunately, what's on the docket?
Well, what's not pro is that I added last night. So having it up 65 pips, it's basically nullified my position. I'm actually slightly lower than where I was on Sunday night. But that look, I look at when you go to like these longer term. Here, let me flip it over here really quick. Just give me a second. When you flip it over here to the longer term charts of like the euro yen, for example, this is the weekly chart. I'm really still focused on the 618 retracement, which comes in just about 134. So this is near the prices I wanted to be short, but like I said, because we had such a weak close in U.S. equities, I added yesterday on this breakdown through here at like this 133.50 level. So here it's back up in my face now, and now I'm slightly down in the position. But again, I have to, even though I look at it and go, God dang, this thing is just ripping higher. The thing is it's still close to where I really ultimately want to be short. But I can't help, I mean, if you're dealing with the yen pairs, you have to look at the Nikkei, and the Nikkei, bonds. This is, well, and bonds too, but look at the Nikkei.
Yeah.
I mean, look at this rally. I mean, we are at new, highs, multi-year highs right now. Yeah, it's extremely powerful. So it's something that I have to pay very close attention to as we continue to break out if I'm gonna maintain yen exposure.
Do you ever do this, Blake? Like when you're, say like, you have something in your face. Okay, so you're thinking, about your positions, right?
Yeah.
Sometimes what I'll do is I'll say to myself, if I was flat right now, what would I do? And then if my answer is I'd sell something up here, then I know I'm not rationalizing the trade.
Exactly. Well, that's the self check that you have to do, and as when you coach traders, specifically Dale, and that's what you do. It is really it's a key question you have to ask yourself. You have to look at your trade and say, would I be in it right now? Yeah. And like right now I look at it and go, yeah, it's up here, but I would be a seller up here, even if it was if I was flat. Yeah. But that doesn't mean
it takes some of the emotional would have, could have, should have out of it, because now you're being really you're being present in the moment instead of, oh, I wish I wouldn't have added last night. And have that affect your psychology.
But you also have to ask at the same time. You have to say, okay, if I'm wrong, where am I stopped out, and can I manage that trade? That because when you ask that question, like, would I still be short up here if I was in a position? Yes, great, I would be, or in this case, I would be. Does that mean I need to add to my position? Well, then you have to think, okay, if out of my total position, if I get stopped out, how bad is it going to hurt? See, like for me, I can't add. Like I can't add as much as I want to add. I can't. It doesn't make any sense from a risk reward perspective, because I added at such a poor spot last night. And so like my position, yesterday afternoon, being short down here and being short over here. I mean, I'm, my cost average is
handcuffed a little bit, but the trade is still right until proven wrong.
Right. It's like, I obviously got to watch it carefully, and make sure it doesn't get away from me. Fortunately, I've got some pretty good positions on. I'm still short a lot in New Zealand. And if you guys missed the reason why the Kiwi dollar is breaking down, here's the Kiwi dollar, and this is a massive break, guys. This is big time. Okay, so the new
that's
government.
what I was talking about. You always have balance in your book. Well,
okay. Not always, but I'm happy when I do. I can't say that I always do.
I'm through trying to compliment you.
Thank you. I appreciate. I appreciate it. I just want you to know that sometimes I'm not. But today I've fortunately I'm short a lot of New Zealand dollars too. So and last night the new government is going to revisit the RBNZs. Basically, they're gonna they're gonna recheck they're realigning their objectives, right, Stelios? Instead of being just inflation based, they're looking at employment. Yeah, and so that RBNZ is going to be focused not only on inflation but also on employment, and which traders look at that as more of a New Zealand negative, because now the RBNZ is going to be factoring in several things before making its policy decisions, very similar to what's happening in that happens in the Federal Reserve, right?
Yeah. I just want to make one comment and I'll let you continue. Is that interest rates is a tool that can only do so much. So you can use it to target inflation. Once you start making it more and more complex in terms of what you're trying to achieve, it's like trying to, you have a hammer and you're trying to nail everything basically with the same tool. So it's complicated, and it brings a lot of uncertainty. And I think that's one of the reasons why the Kiwi is getting crushed at the moment.
Yeah, and it's just accelerating, these moves that we're seeing, and everything from the Aussie New Zealand, which is is in major breakout territory, and it's still, I'm still targeting 116 on this move, maybe even higher. Some people think it can go as high as 120 here within the next few months. The Euro New Zealand is ripping. I mean, we're nearing the 161% extension channel top, and the Euro New Zealand comes in, way up at 174. We're at 170. The pound New Zealand is it's obviously got the big cup and handle pattern, broke 190. We're breaking higher, across the board, and breaking lower in the New Zealand across the board. The New Zealand yen is breaking down, even with the yen strength, or the yen weakness, excuse me. The New Zealand yen is breaking down. If that's not saying anything, I don't know what is. So the New Zealand dollar looks extremely weak everywhere, and there's there was a Forex Live, which Adam Button heads up their Forex Live, and I have a lot of respect for what they do. You
have beers with Greg.
Yeah, I do, but no, I mean, but I appreciate what they do, and I appreciate the level of talent that team has. But going to they had posted something about I think it was City FX, maybe, that was getting long yesterday on the New Zealand dollar at this support. They were getting long, is either the New Zealand dollar or the New Zealand yen, I forget what it was. And from a risk reward perspective, it made sense, but and I think it was Greg that did the write-up, matter of fact, Greg Michalowski, he's like, it doesn't fit my risk parameters, it looks too weak. And I mean, the Kiwi is buckling right now, and it really, the Kiwi looks like we're gonna trade down towards 66 cents by year end. So to make it down here to 66 cents wouldn't surprise me at all here within the next couple of weeks. Like I said, before year end, we should probably see 66 cents. But really the new government, the questions behind the new government And now they're really going to start making changes to how the RBNZ looks at monetary policy. Is just it's feeding into weak New Zealand sentiment across the board. So no matter what you're trading, you could be trading the New Zealand Canadian, which is one that I trade every so often, but not, you know, I'm not trading it right now. I mean, you can see this thing's about ready to break lower as well. I mean, we haven't done analysis on it in a while, but it looks like it's gonna, it's gonna break down towards probably this 82-cent level. So yeah, the Kiwi looks extremely weak. So fortunately, I may be a little upside down in my yen pairs right now, because I did sell the dollar yen as well. I still have a lot of New Zealand short exposure, which looks really good. But also there's something else. If you're trading the Aussie New Zealand, you got to think about Australian CPI tonight. The market is expecting an uptick in inflation, but like what we saw in Canada, we didn't get it. And so, the risk might be that the Australian, inflation is not as strong as the market expects, which could lead to a pullback in this Aussie New Zealand, back down towards 112 or so. But on the flip side is if Australian inflation data comes in strong, we could be trading a lot higher going into tomorrow as well. So just some things to consider, because today it's Tuesday, but if you take a look at U.S. equities, we had a really crappy close yesterday, but we're still holding up very well. And you can see right here, I guess I can just draw it out. Here's the S&P. It's still holding up pretty well. And as long as the S&P holds the overnight lows, that's fine. But the flip side is we might have a bear flag developing here. So that's something to, also.
Or a right shoulder.
Yeah. I mean, it could be a head and shoulder pattern. Yeah, it could be. Yeah. I'm not gonna say no. I'm just, I think
that does look, because that was impulsive. Well, I'm not. Would you have called that break yesterday was pretty fast?
It was pretty quick. I think Grega, who you're going to bring on as an interview a little bit later, I think he could probably talk to you if that was an impulsive, or he would count that as an impulsive move. But that was a pretty big break. I mean, so but the stock market is up this morning, and you take the Dow. The Dow is actually up quite a bit because of Caterpillar. Caterpillar's earnings really pushed us, up into new highs. Whether we unwind all that is to be seen. Because you also have like the Nasdaq's underperforming too. I mean, look at the Nasdaq. The Nasdaq actually looks pretty weak. And this is something to me, and this is again, this is more of a flag pattern. I drew this support here because this is the Nasdaq, by the way. Yeah. This lower trend line right here is probably fairly important, but you can see we're flagging as well. This could be a bear flag. So one of the things about the Nasdaq, and this comes from like the guys that I trade with every day that are big equity market traders, and some of the best traders I've ever seen. The group that I trade with, and I'm not talking about the guys and gals in the chat room. I'm talking about the closed-end fund that I trade, on a daily basis. These guys, the majority of them are mostly equity market traders, and one thing that they've been pointing out is, with higher rates is going to be, is more of a Nasdaq negative. So they play long S&P, short Nasdaq a lot, or long Russell, short Nasdaq. There's
an old expression, Blake, and Nasdaq kind of exemplifies it, that when the generals are charging and the troops are hesitating, the generals get slaughtered. And moving into the Dow in a way is kind of defensive compared to Nasdaq being more spec, higher beta stocks. So the Dow outperformance is going, just in case there is a pullback, people feel safer in those stocks. And, you know, things like Amazon that Nick called the top in hasn't seen a new high in 2 months.
Yeah,
Which
you know,
is, you know, unusual.
it is, and you know, I think you're right. When the high beta names aren't you know, aren't participating, it's something that, you know, we should be paying attention to. And I don't, but again, it's right now what we're seeing is in regards to the stock market, we're seeing money not leaving necessarily the stock market, is just shifting. It's sector rotation. So, which isn't bearish necessarily, but it is rotating, and it's rotating out of the high beta names. And, you know, the NASDAQ may, you know, maybe in the midst of trying to develop some sort of rounded top, like some big, you know, top, which eventually could probably weigh on the S&P as well. But anyway, that's just like the equity markets. I just bringing that up just because, you know, the move in these risk assets could obviously have a pretty big impact on what's happening with currencies. One of the more difficult things about trading the currency market right now is with the volatility so low in the stock market, it's not allowing the FX market to really have, you know, big sweeping moves either. It's kind of tamed the volatility in the FX market as well. At least the FX market, we're getting some two-way action, but you know, the stock market is still so contained right now that it's hard to see the FX market break loose. One of the other charts I want to talk about before I hand it over to Steve this morning is that the U.S. dollar Mexican peso, and the guys and gals in our chat room have been very, very, you know, aggressively long the U.S. dollar Mexican peso. We hit the 38% retracement, or really damn close to, on this bounce. You can see here, okay, see this fib from the highs, the all-time highs to this low. We're basically hitting the 38% retracement. It comes in at around 1920. I wouldn't necessarily sell the U.S. dollar Mexican peso. I'm not shorting it, but I think it's something that you guys need to be aware of if you're long. So if you're long the U.S. dollar Mexican peso, you need to be cognizant that we're really brushed up against. Here, let me grab we've got a lot of resistance coming up here. You can see it all through here, and I think that this could offer, you know, possibly a place to be short. I'm not, you know, too excited about trying to step in front of this train right now, but at the same time, if you are long and you've been playing the U.S. dollar Mexican peso the long side, I think you gotta be a little careful. Obviously, you know, the ongoing NAFTA negotiations are having a big impact on, you know, what's happening with the peso. Flip side is if we break this resistance, the peso is going to be, you know, extremely weak. We probably, you know, see 120 again, and that wouldn't be too big of an issue, I wouldn't think. So that's something else that I'm paying very close attention to. Obviously, the dollar index is at the neckline of the inverted head and shoulder pattern. You know, you had mentioned a little bit earlier, Dale, about, you know, I'm not excited about being long the dollar. It's something you said along those lines, and I agree that the dollar is up against resistance. I mean, if the dollar can clear 94.25, which is the highs from a few weeks ago, if we can clear that 94.25, the dollar index is going to be extremely bullish. But the flip side to that is, you know, we are up against the neckline, and it doesn't. It almost, from a risk reward perspective, it almost makes sense to be short the dollar right now, which, you know, I've got a little dollar yen short, but I'm not like sitting there aggressively shorting the dollar either, like buying the euro, you know, buying the pound or anything like that. But if we do, you know, get a rejection from here, I wouldn't be surprised. And remember, probably the most talked about pattern right now in the FX market is the inverted head and shoulder pattern of the dollar index, or the head and shoulder pattern of the euro. This is what everybody's looking at, and when everybody's looking at it and playing it the same way, the chances of it working out become a lot less. So, you know, I'm very skeptical. You know, I'm very skeptical about shorting the euro, buying the dollar, and I want to see some more confirmation, maybe a catalyst why I'm doing that. You know, catalyst maybe being the right Fed governor being selected where it is extremely dollar bullish, you know, or you know, the tax plan gets pushed through, the tax reform gets pushed through, whatever it is. I'd like to see a catalyst that drives the dollar higher versus making the assumption it's going to happen, because I like you, am a little skeptical about being long the dollar at this point. So that's that's kind of like my brief overview. I wanted to actually pass it over to Steve. Is Steve around?
Hey, mate.
Hey, good morning.
Always.
Nice review, buddy.
Thank you. How you doing, Steve?
You know, before I worked with you, I used to think I was the best trading room host.
Oh, come on, you still are. I'm not a host. I'm just.
You know what I mean. You know.
Yeah. So
You're
sorry,
better. You're better.
You're the best in the business, man.
Yeah.
Yeah. What'd you say, Stel?
I was just gonna say sorry, Blake, but yes, he is.
He is. I tell you.
Steve is here.
Steve is here, and
I am.
Good morning, Steve.
Hey, buddy.
Good morning. How have you been, guys?
We're bright as a diamond. You better put on your shades.
Oh. Full of things. Anyway.
Okay.
Well, Steve, I left you a lot of cross rates to go over today. I'm sure you're going to have your hands full before Greg comes in for an interview.
Yes, certainly.
He's not doing an interview, but he'll be
he's
here.
not. He'll be here. Okay, great. All right.
We'll do that one day, though.
Cool. And I know
Definitely.
you have a lot of great interviews set up for the rest of the week as well. So awesome.
Yeah.
All right, guys.
Wednesday and Thursday. Yeah.
Have a great trading session, Steve. It's all yours.
Thank you.
Thanks, guys.
Bye-bye,
Are
Blake.
you nervous?
Have a nice day.
Steve, are you nervous?
Very, very. Trembling.
All right. Shake it off, man.
Okay, just wanted to give a brief update. I know that Blake spoke about it. The Nikkei has now run during the past 32 trading days, 14.1% higher. That's an implied yearly rate of increase of 116%. Just want to put in context, you know, the craziness of, you know, this rally we've experienced during the past 32 days. Obviously, so I don't get misinterpreted, these kind of moves, you know, are showing, you know, that we're in an impulsive move higher, and usually that means that, you know, you shouldn't be looking for a reversal. No, I'm not talking about a pullback, because a pullback sooner or later we should have. I'm tracking this, you know, steep ascending channel here, and I bet that some type of a pullback should come rather soon. But what I'm trying to say is that probably, you know, that pullback is not going to be a top of some kind. But on the other hand, you have to put in context that this move higher has been literally nuts. The daily RSI is now at above 85. So obviously, you know, being a buyer up here, you know, makes no sense in the short term. Now, you know, if we see a pullback, you know, I don't even know if we're going to make it back to the ascending wedge. You know, it's a totally different story. That will probably present a better opportunity. Now, having said that, let's go back to the USD yen, which obviously cannot follow in pace the Nikkei. I mean, most probably there's absolutely nothing that can follow in pace the Nikkei at the moment. It seems to be faster than these trains the Japanese are making that go, I don't know, 500 kilometers per hour. But on the other hand, the Nikkei, you know, the USD yen, sorry, did break above this triangle. We had a day of weakness yesterday, there's no question about it. But as it seems today, for the time being, we are just paring back the losses and, you know, moving higher. And, you know, that's what you should expect from a triangle. Now, you know, I don't know how much higher it's higher before we stall. Yesterday we were looking at some levels. Luca gave us some insight as well. I have this area here at 116, but below that, you know, we have areas that can stall us temporarily. Anyhow, you know, we can easily move to 116 with whatever that means for the rest of the, you know, yen pairs. Blake has already talked about the Kiwi. there's not much to say here. I mean, Kiwi is breaking one level after the other. Aussie might be putting a late attempt to follow, but as I had said back then when we tested it, for Aussie, it's all about this 77.30, 77.40 area. You know, unless we break below it, you know, there is no real big technical break. But on the other hand, I do see that the Aussie is heavy, and I do believe that it has a high potential of following Kiwi. Perhaps not in that pace, obviously. Kiwi has extra fundamental reasons for going lower. So, you know, that's why we might resume seeing Aussie Kiwi being well bid. Yesterday, actually, we got a strong, we got a bearish engulfing yesterday, and you know, I thought that this might be enough to bring us a little bit lower before higher, but today's price action shows that, you know, it's too strong for that to happen. So perhaps that will happen after we test this area just a little bit above 113, which if you go back in the chart, as you'll see, it's a strong area of resistance. So, you know, I would still be, I mean, if I wasn't involved with the pair, which I'm not, so I don't get confused. So, you know, I'm talking in general, if somebody's not involved with the pair, I would be a little bit of skeptical buying up here, you know, regardless of the fact that I think it's going higher. It's always about, you know, the reward to risk ratio, and you know, up here it seems iffy. I mean, obviously you're buying with a trend, so you know it can work for you, but you know, where do you put your stop loss and where do you put your first target? You know, and since I consider this area, you know, just a little bit above 113 to be very strong resistance, you know, that's what would push me off from buying here. On the other hand, if we look at a few more pairs that, you know, are interesting, is Euro Kiwi, which has finally now reached the 161.8 target. That doesn't mean that it's going to pull back from here. It just means that, you know, you should be a little bit careful here, because this is a potential area to see some type of a pullback down there. Also, we have the ascending channel, as you see, so it might extend a little bit higher. Okay, but regardless, this is also a very nice currency pair to look to buy into, you know, after any kind of any sign of weakness. Same applies with the Aussie Kiwi. I wouldn't be buying it here for obvious reasons. Okay, so you're either aligned with it or not, but you know, buying here makes not much sense. Okay, let's have a look at a couple more items and then we'll go through questions. Let's have a look at the Euro Yen.
So, good.
Okay, the Euro Yen. The Euro Yen yesterday came back, you know, it gave us a bearish engulfing, which, you know, was a warning signal potentially, but, you know, as I wrote in the technical analysis, you know, that doesn't mean very much because we were still trading above the triangle, and, you know, from a technical perspective, I mean, you know, there was no damage done yet.
Yeah, if we got back inside that triangle, Steve, would your view change?
I would become a lot more skeptical, but Dale, as long as we trade above this area here that I'm showing you,
okay,
you know, I can't turn bearish. That's exactly what I wrote. So, you know, I remain bullish. Don't forget that we also wrote an article about that, and one of the pairs we were looking at Euro Yen. I don't know how much higher it can move from here, because obviously we have ECB ahead of us, and you know, it's a big bet ahead of the ECB. But I can tell you one thing for sure: it keeps trading in a technically perfect manner. Okay, we're getting moves higher, we're getting some type of consolidation, we're moving higher once again. In this case, we retested the triangle, we seem to be moving higher. So, you know, why would you be bearish? I mean,
I just saw that there was a possible Elliott count, and I want to ask Greg about it, that up here, that we could be forming a C wave of 4. So you get, you know, one decent break back down under 131.
Yeah, might, but you know, the trend is your friend, and unless we see some signs that this trend is turning around, which they're still not here.
I've always had, until you guys anyway, the wrong kind of friends.
No. You have a very good. You have a very good.
You know, Mr. Top Pick, Bottom Pick.
You have a very good eye for the markets, and anyhow, people should know that trying to top pick or bottom pick, even for the best traders, is an exercise that has at the most.
I'm really only. I know people know what I look like. I'm really only 40.
At the most, like 40-50% chances if you're like excellent at it. So obviously, when you're trying to pick a top or a bottom, you know the reason you do it is because the reward to risk ratio you're going for is amazing. So it can compensate for the low probability of making that prediction, because it's always a low probability. You know, saying this is a top or this is a bottom, always, unquestionably. It's not a matter of skill, even for the most skillful one. So you know, this still looks, you know, quite good. Pound yen as well, as long as it remains, you know, above this trend line that we retested and above this descending channel, it remains bullish as well. And let's have a look at one of my favorites, because I think it's, you know, one of the most perfect technical setups. That's why I'm also long. It's the CAD yen. Okay, the CAD yen, the CAD has been weak during the past few days, but the CAD yen still remains above this inverted shoulders neckline. It's also been trading in a descending channel, which isn't even steep. I mean, the overlapping price action here looks clearly corrective for the time being. So I think this also has the potential of, you know, producing another move higher. So unless proven otherwise, you know, I remain constructive on the vast majority of the yen pairs, because from a technical perspective, they look, you know, they look quite appealing. Okay, let's have a look at some of our questions, and I'm pretty sure that I'm going to get some ideas about other things that I might have forgot to mention that I'm monitoring. Draghi Thursday, yes, Brett, that's absolutely right. Thoughts on USD Swiss? Sure, let's go. Okay, USD Swiss is testing, you know, my next area of resistance. The next area after that is at parity. And, you know, I don't know if we're going to manage to break above this zone before Thursday in the ECB. The pair has been clearly helped by the fact that the Euro Swiss is still slowly moving higher, but it is moving higher. Okay, so today perhaps we're gonna get. Let's see. It's going to be like the highest close since the day that the floor broke lower, and that's back at the beginning of 2015. So there's a good chance that today we're going to see, you know, the highest close in more than 2.5 years. Okay, so the Euro Swiss is doing good, and that's helping the USD Swiss, and that's why you see that the Euro USD has more or less done nothing during the past two days. And the USD Swiss is still, you know, creeping higher. But I really believe that, you know, unless we see what happens with the ECB, anything else is a bet here. We have the technical levels to play around with. We have the 97.50 to 70 area. We have the, you know, as the first support. We have the parity level that's also like horizontal resistance. We're currently, you know, in the middle of that. So, you know, taking a position unless you have a strong opinion on what's going to happen with the ECB is not a good idea. If you're already long, fine. If you're not involved with the pair, I would definitely wait to see a reaction after the ECB and, you know, make decisions based on that. Important to keep in mind, Trump close to announcing Fed chair. That's true, and that will play a big role. Any economic news this morning? Stelio, anything much to report?
Yes, there are a couple of things. Hold on. We have manufacturing PMI and services PMI in the US, and CPI number out of Mexico. So basically very little actually, but so nothing huge. And API very late today, late our time, I mean.
Yes.
So,
DB says that Euro USD's RSI is still holding the 40s, and that shows that it's still in an uptrend. Yeah, it doesn't. I mean, I agree with you. Usually in an uptrend, you don't want to see a break of 30 if it's strong. If it's a strong uptrend, 40 of the RSI. That still hasn't happened. But on the other hand, ahead of the ECB, you know, that's not a confirmation for anything. I agree 1000% with you, DB, that the price action we've seen so far is clearly not impulsive to the downside. There's no question about it. But sometimes you might see an acceleration to a direction after some news event. For example, the ECB. I'm not.
What do you think? What are your expectations of the ECB, Steve and Sal? You know,
let me be clear. I do believe that they're going to do their best not to help the euro move higher.
So they want to sound like doves. How do they do that?
That's a problem. But on the other hand, I'm not really convinced they're going to succeed. You know what I mean? Because it's one thing.
Yeah, we've seen the market just run them over on the way up in Europe.
Yeah. So, you know, I'm really skeptical.
I actually agree. There's only so much jawboning you can do to keep the currency controlled, and they've lost that now. So they actually have to do something to keep it from appreciating. What is that?
Like announce a new QE program,
or maybe just give hints that, you know, tapering and, you know, interest rate normalization is a long way away, or something like that. But like with the yen, for the most of 2017, they were trying to talk it down, and it kept strengthening. So there's only so much you can do by talking, and the market knows this now. That's the thing. You know, the market now doesn't really believe central bankers. They believe on what they see them doing, not what they're saying. You know, I'm exaggerating.
That's a pearl. Yeah. Actions speak louder than words.
We got a weird request from a friend here to have a look at the Toronto Stock Exchange.
No, you scared me there, Steve.
I know, yeah. No, I didn't mean that. Okay, what can I say, mate? I mean, you know, I've never had a look at it. I'll be absolutely honest with you, but I can tell you one thing for sure. It's bullish. And why am I saying it's bullish? Simply because we had clearly a very strong impulsive move higher since the very beginning of 2016. This is one more example of seasonality that we said. Look at the Toronto Stock Exchange. It bottomed like within the first few days of 2016, and it has been moving higher since, in what is clearly an impulsive move, because, I mean, you don't need to say much about it. It moved like 40% higher
this year.
It moved 40% higher from the beginning of 2016 to February 2017. So in 13 months, it moved 40% higher. My God. Okay.
How did I miss it?
I don't know. I've never even had a look at it. And you know, the correct move lower, if you look at it, is 1000% corrective. 1000% corrective. Why do I say that? Simply because within 13 months, we moved 40% higher. Okay, and then it took us. It took us.
It wasn't even 38%. It was probably like 23.
Yeah. And then it took us 8 months. 8 months to retrace like less than 7% of that. So when you get 13 months higher, 40% higher, and then you get eight months of like consolidation, because in a 40% trend higher, moving lower like 7% is like consolidation. So this is clearly a correction, mostly in time, and not in price. Okay, because even if you want to see it as a fib, let's go here. This was like barely at 23.6%, not even lower. So what can I say? This thing is bullish. Would I be buying in the short-term up here after seeing this move? No, I wouldn't. But like, you know, I would. It seems that momentum is, by the way, in the short term, it seems that momentum is going off at the moment. So I would expect sooner rather than later to see a move lower. But I think that this move should be bought. No questions asked. So, for example, if we were to find some areas to buy that, something like this zone, I guess, maximum. We can even find support higher. So yeah, it remains bullish. I mean, what the move? What the stock markets have become like stupid. Okay, so that's it about the DSX. Thank you for bringing that to my attention. It was interesting. Pound yen and pound Aussie. We already had a look at the pound yen, but let's have a look at the pound Aussie. And let's have a look at the pound Kiwi as well, by the way, since we are at it. Okay, what I like about the pound Aussie, for it to go higher, is that we got a false break below the neckline. On the other hand, I wouldn't be selling that neckline, you know, exactly at the break. The reason I wouldn't be doing that is because I already had in my charts this zone that was just a little bit lower, and the 200 DMA was exactly there. So the reason I didn't trust that neckline so much at an initial move was, you know, that fact. And, you know, the way we got a snapback the day after and retraced not only, you know, the losses of the previous day, but actually closed higher, you know, is telling. I mean, it tells you a lot. And, you know, these kind of false moves lower, you know, usually are good signs that, you know, the move is going to resume higher. But
I just have one news flash, Steve. We're getting a kind of a negative candle on the 1 hour euro yen here. And, you know, low risk trades, I love them. Okay. So, I mean, you could really just short it here at the market and risk 23 points. And if this does turn out to be a failing rally, the R to R could be pretty good. So just wanted to point it out that we're not making new highs and getting a reversal candle for all the action junkies in the room.
Absolutely.
Okay, but
I just want to point out once again that I don't even look at hourly charts. So
I know that. I know.
Yeah. So
you know,
for my trading,
there are a lot of, Steve, you may not
Absolutely.
believe it. I believe
Absolutely.
you believe it.
A lot
of us like to make our brokers rich. Okay.
Trust me, I'm making my broker rich as well. I mean, it's amazing.
Yeah.
And I can't imagine how much a scalper is paying. I honestly can't.
Oh yeah, thousands.
I can't. Yeah.
All right.
Okay,
That's it.
pound Kiwi. Pound Kiwi. Listen, for pound Kiwi, because you know, I want to talk about this. I warned about this area plenty of times. I mean, we broke above it. We retested it yesterday. This is like the pair is breaking above an area that is now the trend line that, in essence, puts likely an end to a very big bottoming pattern. So, you know, this is a bottoming pattern that started more than a year ago. You can call it a rounded bottom also. And we're actually breaking above it. And, you know, any pullback to this area, I think is going to be an excellent buying opportunity, because from a technical perspective, if we confirm this within the next few days, the pair should be headed a lot higher from here, a lot higher. You can see it from here. If I zoom out, that, you know, this is a big bottoming pattern, and this trend line break that we're seeing here is huge.
Hey, Steve, there is one technical question from Kareem.
Absolutely.
He wants to change his subscription to annually, so he wants to know how he does it.
Oh, yeah, absolutely. I
Right.
can show you that.
Okay.
I can show you that.
I think he probably wants to get into the trading room then.
Okay. When you go in your platform in your account and you go to billing settings, you'll see your subscription here. Okay. Mine, for example, is a monthly as well, although I have an admin discount. So you're going to go here and you see, you're going to go to plans. So billing settings, from here, billing settings, plans, and you're going to see the plan that you're into, if the plan still exists. But even if it doesn't exist, so you don't see it, you're going to choose the annual plan you want. So for example, whichever of the annual plans it is, I'm going to do this as a random example. And then the system is going to do the following things. First of all, it's going to credit back to your account the unused days of your current plan, and then charge you for the difference and upgrade you after you press send payment to the annual plan you wish. Okay, as simple as that.
Does he have to pay the whole year up front on the change?
Yes, for the semi-annual and the annuals.
Okay.
But I remind you that whenever you upgrade your plan, you get credited back the unused days that you had already paid for whichever plan you were on. So you're not losing a dime. Okay.
Thanks, Steve.
The money you haven't used from your current subscription are first credited back to your account and then used, for the difference.
Which reminds me, Steve, you owe us money for your account, okay?
Quite a lot, actually. I'm a subscriber since a couple of years ago.
Yeah.
Okay, let's see what else we have. Ronit, 10-year TNX 2.4. Okay, let's have a look at the chart. Yep, and looks good, right? For a potential breakout here.
Yeah.
It does. Speaking of that, let's have a look at the 10-year, because we were actually talking about that with Matt in the chat room just a while ago. Matt, besides posting excellent GIFs, he's an excellent trader, and he also posts very nice things. He has a Bloomberg terminal, and he's a very integral part of our chat room. So this is the 10-year. Okay, and we are currently breaking lower from this ascending channel. So indeed, the yields seem to be breaking higher, the bonds seem to be breaking lower. That's an extra reason to look for further strength in the USD yen and potential to other yen pairs. Okay, because if these breaks get confirmed, that's obviously favoring yen weakness. By the way, let's have a look at the bunds as well, because I wanted to speak about that. Listen, the bunds got rejected from the area we were looking at. I have had this area for a long time, and they currently seem to be breaking lower as well. If that gets confirmed, then I think we're headed for a retest of this super important area. Because
that's a huge descending triangle, man. From 169 to your support level. Yeah, it is. I've read Edwards and McGee.
Yeah, depends on how you want to draw it, because there are many ways to look at it. You know what I mean? But I can tell you one thing for sure is, irrespectively of how you want to look at it, as a technical formation, there is one thing that's not in doubt, that once we get to this area, and if this area breaks, then there is a huge space of thin air below.
Yeah, down to the 2015 lows, actually.
Yeah. First of all, have a look at this uptrend, right?
Yeah.
I mean, just imagine a break of this area, how much more downside it can bring. Just imagine.
Huge.
Exactly. So that's something to keep in mind.
Draghi's going to be unsuccessful Thursday. the market's betting that way, at least today. Don't you think, with bond rates going up?
You know something, it's natural. As I've said many months ago, the Eurozone recovery is progressing at a good pace. Political risk is going away. Yields in the US are also climbing, and you know they're quite correlated. So why wouldn't they, right? Why wouldn't they? Inflation is going up. It's still decently low, but its trajectory is moving higher. There's no question about it. So why wouldn't it? Don't forget how depressed the yields were anyhow. Ronit is giving us a chart, I think, for the TSX. Oh, no. This is a ratio, right? S&P to TSX. Okay. That's an interesting ratio, actually. Yeah. So you're implying that perhaps the TSX is going to overperform the S&P from this point on. Quite likely, because we're on a resistance. Thank you. That's a good point of view. The moves like other markets, they are...
You know, Ronit's charts have to come with a little bit of a warning. You have a warning. You've now entered the twilight zone. So, Ronit, I always put my tinfoil hat on before I look at your work. He likes it.
Our friend Armarin is saying that, is asking if hi there, here is another view of the pound kiwi. We might be at the perfect place for a short too. Listen, I have no doubt that there is another interpretation. Let's have a look at it. So yeah, you're showing that we had that peak up there. You know, and this trend line. Okay, listen, I'm not going to disagree with you, but let's have another look at it, and I'm going to tell you. First of all, as I said, if you remember, my words were, we need a few more days of confirmation, because yes, if you take this area horizontally, we are testing that exact area, and when you see breaks of such huge levels, very often even 100 pips, you know, is not enough of a confirmation. That's why, as I mentioned, perhaps, you know, a move higher and a retest is going to be a much better opportunity. So yeah, there is that potential, and then you have this trend line. It's what I call an internal trend line, which is, let me see how you take it. So it's something like this. Yes. Let me make it. Okay. So you have this and the horizontal zone from there, and we are at resistance. I'm absolutely fine with that. I wouldn't be buying it. I wouldn't anyhow be buying it here. I would want to see like a weekly close or a retest, and the reason I wouldn't be in a hurry to buy it is the following. If this break gets confirmed, we have a lot of upside. So 100 pips will make very little difference, and especially for people that have been trading the pound and the euro crosses with Aussie and Kiwi, they know very well that you can get a daily move of 300-400 pips sometimes. So 100 or 150 pips is close to nothing. So yeah, thank you for your input. Why not? I still tend to look higher, I have to tell you. But you know, that's another reason to be a little bit more patient for confirmation. Thank you for your input. Look for a short-term spot on the bond. It's cracking, says Ronit. Would you call it a flag? And he's giving us a chart of Euro bonds. Let's have a look. Is Grega here, by the way?
Yes.
Oh, welcome, Grega.
Hey.
No, I wouldn't call it a flag, because the move lower is a lot smaller than what you call a flag here. What's your input, Grega, about this? It seems to me more like a bullish.
Let him put his surfboard down.
Yeah.
All right.
Grega, I have no doubt that you agree that this is not a bear flag after this move lower. But what do you think?
Looking at the overall price structure, it's either itself a triangle.
Exactly.
Since
A B, perhaps. A
since
B.
2016, or it can be triangle in a wave B. So it's a very tricky at the moment because we may see a push below into a new low of 2017 before we may again shift it up.
Let me show you what Gregor just said. He says that it's very tricky because this itself, the whole structure is a triangle. So you should expect this. Am I right, Gregor, for this?
Yes.
Or
if we break above the
this was A. This was A. This is a triangle. So you should expect a triangle being B, and you should expect this as a C, right, Gregor?
Exactly, but the tricky point is because it's a complex correction. So in a complex correction, we have different forms, and that's why it's very hard to trace out the particular pattern at this stage because it's still in the middle of a correction. So it's either a triangle itself, the whole structure, or it's a triangle in the middle of a free wave decline.
But definitely not a bear flag. It can provide continuation if it's the second interpretation that Gregor said, but definitely this does not fit the criteria of a bear flag, because a bear flag has to be like 50%, maximum 50% of the pole, which is this, and this has exceeded it by a lot. Gregor, by the way, I know we have...
Option traders would put on a volatility spread here, guys, not knowing which way it's going to come out, and compression and volatility.
Yes.
Right, Gregor? Perfect kind of volatility.
Yes, if you expect an impulsive breakout in the next, let's say in the next 2 months, 3 months, then yes, option trades in either direction could work out, yes.
Yeah. Okay.
You go long.
Perfect.
Well, great to have you, buddy.
Great to have you indeed, and time for me to pass the screen.
Sure.
There you go.
Okay. So actually, if we focus on this, what you just described on bonds and 10-year US notes, actually, what is really interesting is that markets are here correlated. On the top we have Bund. Okay, just let me remove this. Bund. Then we have here in orange we have, which means in the middle we have 10-year US notes, and then we have euro dollar. So if we can expect, at least I expect, based on recent developments, that 10-year US yields will rise, which means that prices will decline here. It means that bonds can also see, as we said, Steve, that wave C down, and at the same time euro dollar could also switch to a new bearish leg, which I expect, but I'm still not convinced that euro dollar has reached its peak because it's not following current weakness on 10-year US notes so closely. So I would be a little bit more careful with euro shorts here. I think there are much better trades when looking against the US dollar. So actually,
but you know something, Gregor?
Yes.
Perhaps this numbness that the euro USD has to some correlations lately, it's just because the market is expecting the ECB. So if for some reason the ECB manages to job on the euro a little bit more than expected, then perhaps it might do some catching up. Also, the neckline of the head and shoulders will break, etc. So perhaps it does some catching up afterwards. Perhaps.
Yes, sure. So you mean that the euro weakness could be a little bit more powerful?
Yes, because it hasn't done so yet by expecting, what the ECB is going to announce. You know what I mean?
So yes, it can catch the moves. Yes, of course. So, but as I said, euro dollar here we have a 4-hour chart is still not confirming this stop in place. So that's what bothers me. It's still very slow price action. Actually, not any significant clear directional moves. So I'm still somehow sticking with this view, which suggests that we may see another push up towards 1.2 level and then turn to the downside. So when it comes to euro trades, I really am on the sideline. And in fact, this pattern looks quite bullish here, just short-term view. It was quite impulsive price action here from recent low, and we have a 3 waves down. Okay, so actually I'm looking at the dollar index very closely for this correlation. We have here 1-hour chart. It's 5 waves down. Okay, from October highs to October lows, and now this can be a free wave recovery. We are still sitting at its 78.6 fib. Retracement is the final fib that should hold if this is really an ABC. So I'm just waiting if either this do or die level at 94 will maybe be broken decisively and we go towards new highs, or it will hold.
My prediction is that my prediction, Greg, is that this resolution is also going to come on Thursday with the ECB. I don't think we're going to do either of that until then, most probably.
Yes, and it's good to wait on a technical reaction with fundamentals before we act, right? So that definitely Thursday could be very important for this to play out. So I think that there are, of course, even if you are expecting euro-dollar boost, maybe till Thursday, there is better play on some crosses, because we know that euro is very strong, commodity currencies are very weak, especially if we take a look on New Zealand dollar or against the Australian dollar. So last week, actually, we talked about the Aussie dollar. I said that we could resume weakness since we identified this fourth wave pullback. On the short-term basis, I was looking for a minimum 3 waves decline down to 770, and looks like that we just tested this region today, but there is room for even more weakness, because if we consider that there was potentially completed wave 4 corrective rally, and if gold and silver will continue to push prices to the downside, then obviously Aussie dollar should remain on the bearish track. So I'm looking for a potential 5-wave development to the downside this week, back towards those lows from October. And if we really reach this new low, this would be very important and very significant trending change, because in such case we would have 5 waves of decline from the top, and this should be very important because it would suggest that this big corrective rally that I was tracking from 2016 has actually ended here at the start of September, and that we are going much lower. Okay, so I would watch out and be aware of more Aussie weakness in the next few weeks, even months, if we get this 5th wave down, and we are actually not far away from this scenario. Also, New Zealand dollar, which is probably leading the way here, is already in its wave 3. I have been bearish since September, when market turned to the downside with 5 waves here. Then we have seen a quick spike up into wave 2, and looks like that we are now extending to the downside with much sharper price action compared to the first wave. And normally that's an indication that we are in a wave 3, which has target at 161.8% here around this wave X level. So this would be my next projection for current wave 3, but of course we may see much lower levels if we consider how sharp price action is becoming on from recent days. Actually, I was looking for trade setup in overnight session. I had sell limits orders, but were missed by a few pips because I placed them at 70.10. It was actually, it was my mistake, because important levels, psychological levels like 70 are working over and over again. Okay, so it would be much better to go in here rather than waiting for a deeper pullback.
Okay, that's a pro, Greg. So
Yes,
instead of trying to get top tick entries, go with big round numbers.
Yes, exactly. This really works very well. But I'm not greedy. I would make a market order if I would be around, but it was 4 a.m. So
right.
Yes, and
I
now
hate that.
yes, you can do nothing, right? No, so now that we are in a 5th wave, what you can do, probably you will not chase it here. You will wait on a 3-wave bounce, and maybe we see a retest of this very important level. Okay, not only that we have tested first level here, okay, and it was also previously support here. Okay, so it appears to be very important levels here from where I will be expecting continued drop.
Let me make a prediction. If you are right about it and we get an ABC from current levels, can you go back to the previous time frame?
1 hour.
Yeah, that. Let me make a prediction. If we get that kind of price, an ABC back to roughly the 70 level, I predict you already that people are going to start talking about an inverted head and shoulders formation.
Okay, let's they talk. But still,
and then it's going to resume lower.
Yes. So if there will be more traders to be interested in long, I would be even more
interested to be short about.
Into bearish view. Yes, because we have this broken trend line, and if we get back towards 70 level, it would be a retest of this trend line. I'm not really sure if we want to buy at this stage when this happens. Also, this is the first trend line. The second trend line is again this one here, where I was looking for potential shorts. Okay, I was looking for a retest of this trend line and then continuation lower. Unfortunately, I was not filled. But what really is important, we talked about this a lot of times, as you know, Dale, in webinars, that when market is trading or falling in 3 waves, and you don't know if it's ABC or it's going to be 1, 2, 3, 4, 5. It's important to keep an eye on this trend line, because if trend line is broken, then this confirms that we are accelerating, and normally you see accelerating price action in wave 3. Okay, right. So that's why I suspect that we are in a wave 3 here.
Yeah, that's a great level.
That would be a corrective price action, then this trend line support, you would expect that this trend line support would hold, right? And you would then look for bullish trades if you would see a bounce. And clearly this did not happen. And not only that we are probably in a wave 3 down, we are in a wave 3 of wave 3, okay, which means really strong decline could follow in the next few days.
Okay? Great mentoring.
So I would really wait on a potential new 3-wave bounce. As I said, this trend line is very important. I'm not sure if we will retest it or no, but definitely if we go towards this trend line, it would be psychological level, it would be previous 4th wave resistance, it would be trend line resistance on this daily chart. Okay, so we have a lot of important levels when it comes to all pieces of the puzzle. So New Zealand dollar definitely on my radar screen, and Aussie dollar could just join this journey with the delay because it's a little bit higher. But if commodities, if gold will continue to push down, then I really think that we could see much deeper levels by the end of the week. Also, let's not forget on the 10-year US notes, they are pushing down, and 10-year US notes are having a very strong correlation with Aussie as well. So,
and also with a very, very strong correlation with the metals, as you said. So I didn't want to interrupt that thought, but we've said it before.
Also, another thing that I want to say is that now when I see commodity currencies under pressure, I'm also looking for other crosses such as pound Aussie, euro Aussie, because euro dollar, pound dollar are actually trading sideways when this New Zealand dollar, Aussie dollar are trading aggressively to the downside. So actually, pound Aussie, I have been tracking this one for some time now, is having a very nice wave structure. Always when I'm looking for trades, I'm trying to look at clear pattern on different markets. Okay, I'm not focused on only one market. So actually I just scanned through the charts, and what I noticed on pound Aussie that we have nice 5 waves up, and more importantly we made 3 waves to the downside. And earlier, as I said, why channels are important. Okay, at New Zealand dollar we have seen a break of this trend line support of this channel. On pound Aussie we have seen the opposite reaction. The market did not even test this trend line. In fact, it bounced sharply to the upside, clearly in impulsive fashion. It took out the upper trend line. So I think this is a nice call, nice for more upside here on pound Aussie, and I will keep an eye on developments in the next.
We had a look at it before, along with the pound Kiwi, which seems to also be breaking above a huge bottoming pattern that like 1.5 year, no, 1 year and something bottoming pattern. Do you have a count for the pound Kiwi?
Actually, I don't have it. I don't have it here, but I will take a look. Okay. You were looking. Okay, you were looking for daily.
If you draw the trend line.
Okay. Yes. Okay.
If you draw the trend line from the 2016 highs, you'll see that we're breaking above. Okay, you can. Okay, you do your stuff, and I'll show you.
You mean 2016 highs? 2016 highs.
Sorry, I meant what is it there? June. Just go to the high that we have. Like, what is it around June there?
This was 2015 high. This was 2015 November. This was June 2016.
Keep moving lower to the. I'll tell you which peak. Lower in the chart. Lower. I didn't mean a yearly high. My mistake.
Okay.
Yeah, zoom in. Okay. Do you see the left little peak that we had there? It's July 2016. What is it?
Here.
Lower.
Here. This
lower.
one?
There. Yes. If you draw, if you draw a trend line from, okay.
Okay.
If you draw it as a
yes, I know what you mean.
Line, yeah.
Okay. You mean this trend?
Yes. Yes. Exactly.
Yeah.
Okay. So actually, what I see here is potential ABC X ABC rally underway. So if I remember real quick, ABC, and now we have another probably ABC move to the upside. Okay.
Mm-hmm. Yeah, but
and
still that should be good enough for like thousands of pips.
Yes, of course, and also it looks like that even this wave A is not anywhere near completion, because if I go to smaller time frame, I see here wave 3 in progress. Okay, so I will make this one real quick.
Yeah.
And
that consolidation didn't even take out previous lows. It was like a rectangle. Yeah, before it blew.
Yeah, that was a triangle for sure. There's no question about it. I was tracking it as a triangle as well.
Yeah.
Okay, so actually you can see we have made waves 1, 2, extended wave 3, now breaking your trend line that you mentioned, maybe slightly more upside here, and then we get.
I would like to retest the broken trend line. Yeah, I would like to see a retest of the broken trend line.
Yes, I agree. So something like that.
Yeah, that would be perfect.
Yes, of course.
Nice roadmap.
So actually, we should also keep an eye on the previous swing high now when it comes to identifying end of a corrective wave 4. Okay, red wave 4. If we get a little bit more upside, and this fifth wave it will be somehow similar to wave 3 maybe, then we should keep an eye on a starting point of a previous black wave 4, which was here. Okay, not the end point, the termination point, which are normally retested in normal sizes of impulses. Okay, so if we get a little bit more upside, then watch out for this level at wave 3 high, and then bounce to the upside. And actually, in such case, that would be the region that I would focus on, your trend line and the previous swing high. So it could work out actually pretty nicely. But as it is right now, I think it's a little bit too soon to or too late for any new trades, because we are anyhow in a fifth wave, so we can expect a correction.
I totally agree with you, because I never like to buy strength after a triangle break, because as you would be the first one to say, usually triangles are fourth waves.
Yes, exactly. So
yeah,
it's a
so I would like to buy a retracement after the move higher of a triangle, exactly what you're showing there.
Yes, so we'll see, but still this can be even 2 months away, 2 months, who knows.
Right. So you from what I understand, you're constructive on all the pound crosses at the moment. I mean the Aussie and the Kiwi. So you know, we're on the same boat.
My point is that commodity currencies will be weak, and while the commodity currencies are weak, euro and pound may not be so weak against the US dollar as someone.
So they will overperform.
Yes. So because you can see that euro dollar is actually sideways, not moving much. New Zealand dollar is falling. Aussie is moving lower. So I think that on crosses, it can be very interesting these days.
Perfect. Anything else you're tracking? For example, I know that a lot of people are interested. What is your pullback target now in the indices? Stock indices. I'm talking about US stock.
You're interested.
Actually, I'm still not sure if that's the end. Okay, because stocks are still pushing to the upside. Nikkei, I think it's very, very high. It's at the all-time high again.
I don't know if you heard the start of the webinar. Nikkei has. I said that Nikkei has gained 14.1% in 32 trading days. That's an implied rate of increase on a yearly basis of 116%. So obviously we are in some third wave or whatever, but the true thing is that this pace of ascent is definitely not sustainable.
Yes, that is true, but we still have to respect the price action. I mean,
absolutely. That's what I said as well. Absolutely.
The trend, but be aware of a correction before you want to ride it, right? So,
exactly.
but not only that, I see Nikkei in uptrend. I also see DAX consolidating. Okay, so I'm not really sure if we will see that pullback yet. We have here DAX on the left. It's a marked potential triangle. We are just going sideways. So saying that top is here and that we are going to the downside would be crazy actually, because
it's very dangerous. Very dangerous.
Since September. So if here on the right you can see that I'm circled each correction, and now could be just a larger correction.
You know something, Greg, I think we can agree on something. If you see there the previous corrections you have marked on this one, it's more than obvious that momentum has dropped, which means that more likely than not, another push higher from this correction that we currently have is probably going to be terminal, at least in the short term. You know what I mean?
Yes, but if price stays longer in a correction, it means it can provide much sharper breakout.
That's true. That's true. The more it consolidates in time, yeah, you're right.
The sharper price action can follow. So actually, if you take a look at similarity of this pattern here, okay, let me just mark it once again. Okay, here, this price action, we have seen a new high here and then moved somehow sideways. Here, a new high and then moved somehow sideways. So actually, this appears to be very, very similar, similar price structure.
Yeah, really, just a little larger.
Yes.
A little more time, yeah.
Although it's counterintuitive, Greg, although it's counterintuitive to try to guess from a technical pattern in one instrument what's going to happen in a macro level on another instrument, that would fit well with the euro going down on Thursday, because obviously if the ECB manages to push the euro down, we should see that kind of a push higher for the DAX, right?
Actually, I'm not really sure, because correlation is not working good. If we then, because you can see that DAX is up since September a lot, which means that euro dollar should be lower, right?
Yeah.
You're thinking too much, Steve. I see smoke coming out the top of your head. That sounds terrific. Okay.
You're right about that, Greg, but nobody can doubt that a weaker euro won't be of help to DAX, right?
Yes,
that's correct. I mean, it's making it cheaper for foreigners to buy into.
Yes, that is correct. That is absolutely correct. But as I said, when I look more robust, I I just don't see correlation to be in place for now, at least not going tick by tick, not even day by day. So I'm not really sure it's if tradable this direction in such a way, because you would normally expect that euro would be much lower. As I said, from September we are much higher on DAX, and look where euro dollar is.
Absolutely, I'm not doubting that, but still
Yes.
remains the fact that if euro plunges, let's say 200 pips, that definitely won't hurt the DAX. It will probably help it somehow.
Help, of course.
Yeah.
To make a breakout even easier to the upside. I agree. Sure.
Okay. Anything else you're tracking?
Let me take a look. Not really, actually. Pound, Aussie, New Zealand dollar, Aussie dollar. That's it, actually.
Yeah, you know, something else I know that you're tracking, and we had a question about it as well, is crude. I know that both you and I are looking higher still for crude. Any update on your next objective from here?
Actually, I'm still interested to see how market will finish this week, because it may provide an interesting breakout here from this head and shoulders pattern. So levels, as you know, can be much higher in coming months. And the 4-hour chart, I'm just waiting if we'll see an accelerating price action to the upside in this week. So if we close around 54 on Friday, then I think this could be a nice confirmation that we are headed higher. But actually it's still sideways, but I am observing with one eye this very aggressive bullish wave count, because after all, we made 3 waves down here. We made another corrective drop here. Actually, here is my intraday chart. It's a 30-minute chart. So it was a 3-wave drop, A flat for a wave B, 5 waves down for a wave C. More importantly, we turned up with 5 waves. So I'm on a bullish track here with crude oil. And as I said, it may provide a very strong breakout to the upside.
Very nice. We have a friend asking, and probably we can close it at that. But I don't even know if you have a chart button for that. For the ASX 200, obviously our friend is Australian. I don't know if you're tracking it, or if you just want to have a fast look at the bigger structure. You just, you know.
Yes, just a minute.
It's your turn to do something new today. I did the TSX before. You should look at that beast. The Toronto Stock Exchange.
Okay. Okay, I can
try
see
try decaf, Steve.
So maybe that was a triangle. Let's see.
Your brother is calling.
Yes, I can see that. He is working. Probably. He is not sure about some wave counts. I'm sure about that.
Yeah. Use slave driver.
Okay, so actually that appears to be some kind of a triangle. We are breaking out.
So bullish.
Yes,
Yeah.
clearly it's bullish.
But if you look at the very short term, if I see there, probably that's some kind of a 4th wave there.
That's
at the very short term. The last leg higher that we see above the triangle currently.
This should be.
No. Zoom in further. Because I see some consolidation. Yeah, is that a 4th wave there?
You mean here?
Yeah.
Let me go to a smaller time frame. Okay, we haven't seen a new low here. We have seen a retest of the low. So I would go here with such view. This was a flat, and now we are probably in a wave 3. Okay, so now I would mark this. Okay. So yes, we are in 4th wave, I believe.
Yes. There you go. ASX on the fly.
So
Nice.
either we go up from here, okay, or from a retest. If I would trade this one, I would probably wait on this retest of this wave 4. So be aware of a deeper wave for if we make the quick fibs. It's a 38.2, so definitely that would be my zone of interest right there.
Perfect.
Nice.
Thank you, Gregor.
You're
Excellent.
welcome.
Nice, Grega. And you know what? Speaking of instruments, and you're in this, Grega. If you're trading in a cave, come to face and listen to the Wizard of Waves. And if you want to be an ace, faith is the place. Tomorrow we have Lydia. She's going to teach you how to not be penny wise and pound foolish. Come see Lydia. Thank you for hanging with us today, everybody. Good hunting. But remember, if you're still hanging out in your caves, you got to hear the Wizard of Waves.
That was excellent. Thank you, Dale.
I'll tune my guitar next time. All right, so that's a wrap. What a great, Greg has spent a lot of time with us today. So, I mean, you guys learned Elliot today, and a lot of great views, and Steve as usual, and Blake, and looking forward to tomorrow to speak with Lydia Idem Finkley at Faith Might. And what I was trying to sing is that Lydia will help you not be penny wise and pound foolish. So don't just count your pips, count your blessings, my trading warrior brothers and sisters, and we'll see you tomorrow. Enjoy the rest of your day. Good hunting. See you guys in the other trading room. And if you haven't checked it out, you got to check it out. Open your checkbook and check it out. Adios.